Let's bring on board then Sandip Sabharwal as well, who is joining in on the show. Sandip, I wonder what kept you busy on the weekend. Was it watching tennis, maybe the World Cup, or perhaps just sitting by the window and admiring the raindrops?
Yeah, so I think largely the tennis, I think some of the tennis which was played both in the women's final and the men's final was extraordinary. So I think very interesting. And the test match obviously fizzled out, so generated no interest.
Okay, no surprises that tennis was on top of your radar, and I'm sure the markets were as well. What is it that you're making currently when it comes to the overall setup? Just going by the fact that we have major cues as well this week in terms of the macroeconomics, and it's been in consolidation mode for quite some time. Do you reckon that that's the course of action that's going to continue?
See, the views on the markets are mixed among market participants, and that's creating this scenario where it goes sideways. Some believe it's overvalued, some believe it's rightly valued, and some believe there's still value for the upside. So I would say that it's between rightly valued and being more there being more upside. So there were some concerns about monsoons, etc., which we still don't know about. The monsoons might have arrived, but how they play out, that's something we'll see. But incrementally, I think commentary of companies, etc., has started to turn positive on the side where there was a slowdown. Like the consumption side, many of the companies have started to see revival in growth, both driven by their initiatives on advertisement promotion as well as the fall in inflation. So I think markets are reasonably well placed. We'll see some upside. Slow moves are obviously better because speculative activity remains under control. So I would think that there is low chances of any deep sell-off in the markets, and the market should slowly build up gains going forward.
Sandeep, having said that, there are pockets which are growing slower than the rest, right? I mean, we were just looking at the insurance industry data, for instance, and we have seen slower retail AP growth in the month of May, and especially when it comes to LIC, the May premiums are down a good 11%. The market share as well has fallen about 746 basis points in FY24. Just wanted to understand whether the negative news is already in the price because these stocks have massively underperformed.
Yeah, I would say that this sector is sort of unexciting in a way that I don't see any big upsides in this sector. But given the fact that the growth will be there, like there'll be periods of slowdown, etc., but then there'll be growth, and these are relatively lower risk businesses given India's demographics. So I think they will see some gains slowly over the long term, but there's nothing exciting around this sector. So I think the excitement which was there a few years back, that's no longer there, and the current budget changes also put some spokes on the growth cycle. And when we talk of growth in the first few months of this financial year, we also need to recognize that because of the budget changes, there was extraordinary gain, like growth in March because of those changes. And to that extent, the next few months had to be a bit subdued.
About the stocks that were getting flagged off. And Sandeep, just wanted your opinion on what you're making of the auto pack and whether a Hero MotoCorp or a Maruti can be an outlier, do what ITC did about 2 years back.
I think comparing with ITC doesn't make sense because of the fact that ITC languished for, I think, years or a decade, etc. And there were different reasons for the turnaround. Now, here we have to analyze based on how the industry is doing because there is no management focus change, there is no change in strategy, etc. Except for Maruti, which we can somewhat correlate because the company moved from not recognizing the changes in the marketplace to completely adapting to that. And the good part is that the input cost pressures are moderated and are likely to remain soft. Like if you look at what's happening to global steel and metal prices after uptick a few months back, they have again come back to near lows. So I think those cost pressures will remain moderate for these companies, which will aid margin growth. And volume growth has been stronger than expectations. So I think the four-wheeler story is more durable. Two-wheelers, there's been some signs of a turnaround. Now we have to see whether that happens and sustains. And if that happens, then I think some of these companies will do well, because we need to recognize these stocks have already rallied 20-30% from the bottom, and something like a TVS Motors is in fact trading more near all-time highs.
I'm looking at some stocks where breakout has happened, and one big sector where a breakout happened last week was cement. Sandeep, there is this always this yes, no, I told you so, Chinese whispers, behind the corridor gossips in India cement. From 3 years, if there is one stock which has attracted a lot of rumors, a lot of buzz, a lot of activity, is India cement. Where is the stock headed?
So it's the toughest thing to predict where India Cement will go, because it always rallies between the quarters. So I think from the time the previous quarter results come to the next quarter, it rallies, then it falls because of bad results. There are rumors of sell off, and that sell off doesn't happen. So I would say that's how it is placed. Cement is a sector which is very intriguingly placed, where most large companies have announced huge supply increases and capacity additions. So to that extent, these companies are unable to pass on price hikes. On the other hand, the moderation in energy costs has been very significant, and that is aiding their profitability, and volume growth is good. So it's a tough sector to call at these valuations, specifically when we see many of these stocks trading at 52-week highs. India Cement is the toughest to call.
Really does not matter. It is disappointing. It's a stock which Sandip Sabharwal also tracks. Sandeep, can you guess the stock? Summer, winter, does not matter. The company continues to disappoint. You track this, you bought this stock. I'm playing a quiz game with you. You bought the stock when you were a fund manager with JM. You had 5% equity in the company. अरे भाई कैसे भूल गए?
Too
Voltas.
far back.
Voltas. They're just getting it wrong.
So
They're just getting it wrong.
I think there are two aspects to it. One is the overall industry scenario where competitive intensity increased. The second is the fact that we've had a series of summers where something or the other has come up. First was the Delta wave, secondly, late winters last year. This year also, North hardly saw late summers, saw any summers. I think that's leading to the subdued performance. So there are two aspects to Volta's performance. One is the unitary cooling products, where obviously things are subdued. Second is the projects business, where they have seen significant upside traction. So, so I would be actually looking at buying this stock at some stage. Not so I'm not. I will not be because this fall in the prices is actually something which I like. So let's see if it falls a bit further, comes another 10% down, then I would actually be a buyer rather than try to ignore the stock.
Sandeep, mathematically, what changes for IEX now? It was like the halo stock. Nobody wanted to sell it. Everybody wants to now dump the stock. The changes which have come out last week, have they changed the basic moat and the construct of IEX as a company?
Very tough to decipher these changes, because actually I haven't bought into this stock ever, because I always thought that it's very cyclical, because in periods of shortage, normally summers is when they do well, then as the shortages go away, trading activity subdued. So it was very tough to buy it fundamentally. So that's why I have no idea actually.
संदीप सर्दी हो गई एसी में सो रहे थे
एसी में तो हमेशा ही सोते
I guess it's that time of the year where it's actually, let's look at what to do with ITC. 2 years ago, nobody liked it. Now, 2 years ago, the social media was above with a stock which will never go up. Today, it is above with stock which can never go down because it has got businesses which are all doing very well, whether it is FMCG, cigarette, or hotel. I mean, 2 years and the view on the stock has changed, the narrative has changed, the participation has changed.
Yeah, so what's happened over the last 2 years is that valuations have moved up substantially. ITC used to pay a 10 rupee dividend, it was a 200 rupee price, so just the dividend yield was so high. There was extreme negativity, like you said. Now, as the screen is showing, the stock is up 65% over the last 1 year, at a time when other FMCG companies have virtually gone nowhere. or some are in fact down, except for something like a Britannia, etc., which has specific things going for it. Now, at the current valuations, I would think that it's a neutral kind of stock. There's no major reason for anyone who's holding for to sell it. But I think for it to outperform from current levels, there are more triggers required, and which we need to see more improvement in FMCG profitability, what they are going to do with the hotels business expansion, etc. So I think these are some things we'll need to monitor. So I would think that no big downside or upside from current levels.
ITC, it's one of those stocks which has surprised and has really surprised everybody. SBI, Sandeep, it has not participated at all. Nothing wrong with the numbers. Nothing wrong with the numbers. I met the management on Friday, and Mr. Khara was very confident about growth, no problems in NPA cycle, and they are also not worried about the new, ECL norms. Is SBI going to be the dark horse for second half of this year?
It's tough to say given the fact that it's already up. It's not a 200s or 300 rupees stock now. It's a almost 600 rupees stock now. The ECL provision management might not be worried about, but it could have an impact. Uh, so the management talks about funding new age businesses, etc. So we have typically seen historically banks which are very aggressive in funding these newer age businesses typically end up having NPA issues going forward. So I think there are various things we need to monitor. If I would still be more inclined towards larger private sector banks or upcoming private sector banks, ICICI, Axis, IDFC. I think these are these would more be on my outperformer list.
Sandeep, thanks so much for taking time out and joining in with your take on the markets. Let's find out what those mid-cap strategies are. Quick check-in on the